Welcome to the Holistic Accountant Podcast. The aim of this podcast is to demonstrate how accountants must employ a holistic approach to help their clients maximise wealth. It's not just about preparing tax returns. So each week, Mena Abraham and I will discuss topics to help you better understand some of the things your holistic accountant can help you with. Okay, Mena, today we're going to talk about due diligence. It's a term that gets bandied around on the internet and in lots of different places. We thought we'd take a few minutes to explain, hopefully in simple terms, what due diligence is. Mena, what is it?
Yeah, so basically when you're buying a business, Stuart, you want to know what you're actually buying and whether what the vendor is representing is what you're actually receiving. So generally a due diligence covers off things like review of financial records, legal records, any sort of underlying assets, the industry as a whole, it could be competition. Those are generally the things that are covered off in a due diligence. Yep. Now the scope can be as small or as grand as you want it to be. So for example, if you're already buying into a business that you're part of, now due diligence doesn't need to necessarily go into that sort of vast array of all those factors. You could just basically focus on the underlying financials because you already know who your competitors are. You already know what your underlying asset is, but you just want to verify the financial information.
Yep. And conversely, I guess if you're buying into a business and you're a bit skeptical about the figures, well, then maybe you want to dig a bit deeper. So how do you verify? What do you, like if I'm going to go and buy a business and is representing that it generates X profit, what are some of the checks that you're going to do to verify that?
So generally we would ask for things like bank statements, business activity statements, general ledger accounts, track history of financial reports and tax returns and so forth. Again, we may not be able to get all that information because vendors don't like to typically expose all that sort of sensitive information. However, if it's a complying vendor, then that we would like to get as much information as possible to, put one and one together.
And I guess if they're not willing to share that information, then, you've got to be sceptical about that information and maybe reflect that in the price that you offer for that business. Of course, that's the financial due diligence, Mena, but there's a legal due diligence that you'd consider doing. And legal due diligence really is around the legalities surrounding the business. So if you're buying the actual entity, is that set up correctly? Is it, looking back at its history and so forth? If there's supplier contracts, customer contracts, review of those contracts to see how strong they are. If there's any sort of industry-specific matters, if you're buying a financial planning practice, for example, and it has a financial planning license, is that in working order? If you're a trade business and you have certain licenses or agreements, really checking into that. It's really looking under the bonnet of the business and verifying that you're going to get what you think you're going to get. So who does the due diligence, Mena?
The main advisor that does it is an accountant. You will get a solicitor involved in there as part of the legal due diligence, as you mentioned, Stuart.
Yep.
But the accountant is the person that really vets all the financial records and so forth. And it could be costly or it might be cheap. Again, it really depends on the scope of the work.
Yeah, and so you're going to use your own accountant, of course, not the business's accountant, someone that's completely independent. So how do you go about choosing, who to, like if I'm going to go and buy a business and I don't have an accountant, how do I find the right accountant to do that due diligence?
Well, it's important to find an accountant that has industry-specific knowledge. So,
Yep.
If you're buying a retail business, for example, ask the accountant, do they have any retail clients? Have they been involved in transactions that involve retail businesses? So you really need to make sure that they're across the industry that you're buying in to provide sound advice.
Yeah. And normally due diligence is a condition of sale, isn't it, Mena? So you can negotiate the purchase of a business subject to due diligence. So you can sign a heads of agreement. That would be kind of the first step. So at least you know that the vendor and you as the purchaser are kind of on the same page in terms of what you're willing to pay. And then that heads of agreement is going to be subject to completing that due diligence. And if you find some things that are, well, you wouldn't worry about if they're positive, but if you find some negative things, you can obviously then go back and maybe renegotiate the sale price. So hopefully that gives you a good summary of what due diligence is. It's a very important step in purchasing a business and one that needs to be done properly. Thank you for listening to the Holistic Accountant podcast. To find out more, please visit holisticaccountant.com.au.